All right, so we're going to start over here. We'll start with the NASDAQ, right? NASDAQ now actually up 1.4%, but you could see that a couple of things. So I'm looking first at the 3-day time frame, and just to give you a quick overview, S&P 500 not taking out those March lows, why the NASDAQ has taken out those March lows, and we see that Bitcoin, by the way, we're holding the January lows. The reason I'm pointing that out, because Bitcoin actually has the lower low over the summer. Remember this over here? It's very important why we're seeing the NASDAQ over here not only make a lower low from that March low, but it has every single month. It has every single month since that January low. If you come down to the daily time frame, though, on the NASDAQ, you will notice that price has not closed yet below that level, right? You have the low over here. Lowest price point, 12,924. Price made a lower 12-month low, yearly low, intraday. Did not close. We know it here, CTM, we look for major support and resistance levels to be broken and confirmed on a close. So that's still up in the air. Nevertheless, be very prepared, be very aware. We've done here together, that was on Monday, what happens if markets crash. If you have not yet seen this video, make sure that you do go ahead and watch it, because right now, if the NASDAQ does reverse itself, if we start seeing some closes below these March lows over here, there could be much further downside legs taking place on the NASDAQ. S&P 500, ES on the daily time frame, you notice that so far that support's holding. So far, we'll see what happens next. And Bitcoin, remarkable and notable. You can see over here the NASDAQ, the January low. You have the NASDAQ in purple and Bitcoin in blue. And you can see the NASDAQ making 1, 2, 3, and now 4 lower lows. And Bitcoin has not yet done that. That is very notable. I think that type of divergence you need to be aware of it, right? Are we looking at potentially Bitcoin bottoming first in the markets and equity markets soon to follow? We have a lot of tension right now, right? But by the way, Bitcoin does not seem to be acting like some type of high beta tech stock. I don't believe that. I think Bitcoin is Bitcoin, and Bitcoin is many things to many people, and Bitcoin is going to do Bitcoin things. But one of the most important things that we're witnessing, what is causing Bitcoin to be able to maintain, to be able to hold as tech and the NASDAQ and S&P roll over further, right? It's that eternal HODL ratio that we have going on over here. 65% of the market has been holding Bitcoin for 1 year or longer, and people don't want to sell their Bitcoin. People don't want to sell that Bitcoin. So this is called Dow theory. We have the NASDAQ taking out the March lows, S&P is holding them. I'm not including Bitcoin. Bitcoin wasn't invented when Dow theory was first presented, and this is divergence. It's very important over here. It's hold on, I'm gonna try. Theory applies the principles of confirmation to confirm primary trends. Basically, you want to see all the indexes making higher highs or lower lows together, and when there's some type of divergence, that's a sign that that primary trend is about to turn. Now, that's not to say that you're not going to see the S&P 500 and Bitcoin catch up with the NASDAQ and that we're going to see some lower legs lower. That's why I want you to, be aware of this video. Make sure you're watching this video. It's a very important breakdown if we do see the NASDAQ actually, which is on the verge of taking out those March lows. It did it on an intraday basis. If we get confirmed lower, it could spell a bit of trouble. What else? The game of trades, last week here we were talking about possibly we're looking at last week here in CTM, peak inflation, right? And for now, up until the next bout of stimulus, right? Game of trades is also on that. He's saying that but the market will begin looking forward to peak inflation. We're not there. We seem to always be ahead. We seem to always adopt pretty quick. If you understand this, things look very bad right now, but things always look bad at bottoms. That's how they're created. He's saying when year-over-year inflation peaks, probably in April or May, it will be the perfect excuse for the Fed to temporarily hold rate hikes and for the narrative shift to dovish again. That could trigger an epic equity rally, and it's very much in play. It's very much, I know there's a lot of fear out there. Obviously, I'm a Bitcoiner. It's hard for me to have that fear that everyone else has over there when we haven't had these technical breakdowns yet. We'll look at that in a little second, in a little bit. Let's actually look at important technical breakdowns. Everyone's aware of that 53,140 marked in yellow, right? That was giving us a reference point to take profits on anywhere from down here to here, right? It was also given as a reference level to de-risk. I mentioned paying off loans, right? But I'm holding spot and continue to hold spot. I talked about at that very time, if this level at any point breaks to the upside, like if you do, and there was some people who decided that for them, the right decision was to exit spot. Because I'm not exiting spot doesn't mean that's not right for someone else, somewhere else in the world to do. Obviously, we use this to be able to make our own decisions. At the same time, I like to let you know to help further that education, what I'm doing and how I'm doing it at each and every time. And over here, I said, I'm not selling spot, I'm de-risking. But if you're selling spot at any point in time, we come back above this level, that has to be the point where you're wrong and you need to get positioned again, right? That remains the same from where we are. However, with what I'm seeing happening, with what I'm seeing taking place, with the internals of Bitcoin so solid that even under this stress, the stress of war, the stress of the Federal Reserve and central banks tightening worldwide, it's still holding up. And it doesn't mean it's not going to or cannot fall, right? But we know that we have certain levels, 35,000, this trend line over here. And then we have the low below that at 33,000. As long as those two levels hold, right? That first repair, that repair we looked at in early February remains in place. I think this is probably a good time to forget waiting to 53,000 to make sure you get back in. This might be a place down over here as we're near the support line to perhaps start positioning yourself in. And whether, I think that's probably better than up here. Now, look, if we break down though, it's very easy to know where you're wrong, right? 33,000, that might be late. 35,000, that seems like a better area to me. Price right now at below 40,000, that's called good risk to reward. You know that if you then you're out here repositioning over here, if you break down, okay, you're out again, and you just wait for where you want to reposition fully. But it's not a given that we break down. It's just not a given that we break down further. And there are many indications that potentially, Bitcoin is indeed putting in a bottom over here. Either which way, great risk to reward out of it. I think what's really interesting, talking about this point over here, this tweet was put out, or this tweet over here when we talked about in CTM that Friday morning, that was on December the 3rd, right? Look how quickly we were talking about being able to maneuver very quickly. Look how quickly, within a week, we went ahead and released this video on December 9th, talking about, all right, we did not have that euphoric move into a blow off top. The Bitcoin 4-year cycle theory, which has served so well, it has been absolutely the most important thing for getting a lot of people to where they are today. At this point, it just was no more, right? So what makes the most logical sense to occur after that? If you haven't yet watched this video, this is a fantastic video. Go ahead and watch this one. This is us in real time working it out and figuring it out, right? The life cycle, technology adoption life cycle, it's an S-curve. And now you see, actually, this is where a lot of people are headed. At the time that we did this, I was saying, and it's on the original tweet, I think this is a little bit too soon for most people because we were just had a lot of people had a lot of expectations about Bitcoin going well above $100,000. Now people will be like, oh, Bitcoin never hit 100. No. The majority thought Bitcoin was going significantly higher. Some people thought Ethereum was going to $20,000, but significantly higher. Either which way. So one thing different on this chart over here, when you look at this and you're like, wait, this is adoption of Bitcoin. We're over here. Wait, 2030 is over here. Wait, we have so much. This is using the entire population of the world. We have the Blockware Solutions research team they're saying that, you know what, the way that we look at this is entire. I'm not doing that. I'm looking at I've been looking at this with like between 2028 2032 as where the S curve flattens out. The reason for that is that's when you have the top 3 billion people in the world using it. Now, I know there's 5 more billion people in the world, but those people generally are not going to affect, from my point of view, the Bitcoin market, right? Most of those people are living on, in poverty. A lot of those people, a good portion of those people are living in poverty. So I look at it more like the first 3 billion users, and Willy Woo very early on that, as well as many others, many others are continue to be. By the way, I keep telling people, right? People don't, we're so early. Sometimes it's just easy to let short-term volatility distract you from the big picture. I keep telling them. People don't understand they're literally early adopters. That is changing. Next is the early majority. And I try to remind people that you are early. We haven't even jumped the chasm yet. You are an early adopter at the early stages, right? Soon we'll be the early majority. That type of view is so helpful. In speaking of, right, 53,000 breakdown, we since then had one major breakout over here. This was towards the later part of December. It looked really good, but it was faded very quickly, and that trade was stopped out. The next line of repair, this was a Friday here at CTM. This was either the CPI print or non-farm payrolls, but the reversal happening in real time. We got that out on Twitter, right, as it happened in real time, and we saw ahead of time the levels. That break is still in play. And as long as price trades above 33,000, that break is still in play. Now, if we do break this area of flag support, likely we're coming in towards the bottom end of the channel. That's at $35,000. $35,000 is a big, important level. It's the channel support. It's the clone channel support from the highs and the lows. If we break that, 33,000 is the other level that I have in there is very important. There's a good chance that we take out 33,000, and that's 2.5 months away. We can't really predict. If the markets make a lower low here, my awareness, even though it's not what I expect, has me on it. At the same time, I am very worried more about what happens in this area. Interesting that right now the Treasury is supporting the market liquidity that ends around that area. We need, even if we are able to rally over here, to rally right here, we need to make sure that we keep our guard up and remain cautious all the time, optimistic at others, cautiously optimistic under this current Fed policy. And it is the driver of the market.